Hey everyone, it's Evan here from the Trade Risk on Wednesday, May 10th, here with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. Now, I hope you're doing well out there. It's been a boring week so far. That's what a VIX at 10 or even sub 10 will do. Yesterday we closed underneath 10. I think we just notched above that level here to close on Wednesday in the VIX above 10, but still very slow sideways sort of choppy action, but bulls are hanging in there. We're still hanging out near all-time highs. Let's take a look specifically at some of the major markets here. The S&P 500 SPY ETF finished up 42 cents today. That's plus 0.18%. Not quite an all-time high, and this chart you're looking at here is unadjusted for dividends. So if we were to go to the cash market, you can see we're actually, we're above these March 1st closing highs, and again, not quite getting above the 23.99 close that we saw last Friday, or actually, yeah, 23.99 on Monday as well. So not quite all-time highs, but very, very close. Otherwise, though, you can see just how tight and sideways this action has been here in the S&P 500. We opened up Monday right here, tried to probe down, buyers kind of stepped in, a little bit of bottoming tail on yesterday's session, and then a bit today here as well. So we're not getting any oomph behind this market, right? We don't have that strong surge of momentum, but at the same time, it's not doing a whole lot wrong. Trend is still to the upside. Momentum still kind of hanging in there. If you go sector by sector, there is some more movement. Individual stocks, of course, there is more movement there. But as the S&P 500 goes, you can see above the 8 period, that's still constructive. Above the 20 period, still rising. We still have these open gaps here that never really got filled. And again, inches away from all-time highs. So the S&P 500, again, tough to do much in this environment at all, right? There's not a whole lot of movement going on intraday, and we're really waiting for that either catalyst to push us definitively out of this range into new all-time highs, kind of like the Qs have been doing. Or are we going to ultimately roll over here? The line in the sand, I mean, these past 3 days lows, the lows from this week, right around 23.93, or if we go back to the SPY, you could use the lows here from, call it 239. If we start to break down below there, I think then, you very quickly have people pointing out the potential for a double top here, and that very well could be a situation. We could, in fact, even move higher a bit and then roll over. You could have some type of fake out double top. That is possible, but for now the trend and breadth is still holding up. There are some slight breadth divergences, but so minor that I'm not really paying too much attention to them just yet. But if we continue to move higher and we don't see breadth continue to pick up, accelerate, expand, then I would become a little bit more cautious, a little more defensive, or maybe concerned. But for now, I think sticking with this market, doing less, just not kind of spending time staring at the screens when there's not much movement going, letting positions work, trailing up stops. That's all that we've been doing. If we were to go to the IWM, I think this is the more interesting market here, as it has been mostly all year. But what I liked today was one, the outperformance here in the small caps. That's constructive to see. That helped get breadth up to those positive, moderately positive closing levels today. But also notice how many tails we've had down here recently, just over the past 4 or 5 trading sessions in the IWM. You can see buyers or sellers kind of driving price down intraday, but we've been getting these bounces back above 137.50, or really closing above 138 very just consecutively, not giving up, not closing near the lows. And today's thrust above and away from all of these defends, all of these dip buys is constructive to see. I do believe that this is a very critical level to hold, and we've talked about this level in many of our past recaps here. Just this 138 general level, we'd like to see the IWM stay above it, and right now it looks like we could potentially have this sort of impulse leg that started here from mid April all the way up to 141, a pullback, and now maybe a retest or a move back to those highs. If we were to look at the weekly chart too, you can see not too bad. Last week, of course, we had the gap fills, we had the bulls step in, a little bit of a deeper kind of pullback, but again, we're kind of hanging up here. We're starting to move positive on the week, and if we can get some momentum back above last week's close or above last week's candle, I think the IWM will be in good shape and will certainly support the market and hopefully help lift the tides here in a general, more broad sense. So IWM pretty critical. I think the line in the sand very easy to use here. Below today's lows, below 137.50, all bets are off. I think you'd have to be cautious. If we started to lose this, you could see a very swift move back into the bottom of this range. Take a look at this day here. Prices move pretty quick once they get back in this range. So I think below 137.50, I think you need to sort of protect yourself a little bit there. So that's the small caps. The NASDAQ 100 just continues to run away with it. There's no change here. I think today's the fifth consecutive closing high here. We're marching above the 8 period. I mean, this is continues to be a leader. Arguably stretched. A lot of these big cap, large cap names are just floating higher like they're small micro caps. But the Microsofts, the Apple, Google, Netflix, these types of names that have hundreds of billions of dollars of market cap behind them just continue to plow higher here in the Qs. And that's why we do need to pay attention to breadth, because we don't want to have that mask sort of thrown over us to only have those big, large cap, market cap leaders keeping everything afloat. We want to make sure the small caps participate in some of those other, medium-sized stocks. So that's what we want to pay attention to, is breadth going forward, like we noted earlier. So that's the Qs. That's the market as a whole. Let's look at some of the other majors. TLT still can't really get anything going here. It's been pulling back off of the highs made from mid-April, and it just really hasn't found its footing just yet. Bulls will certainly use this as the sort of line in the sand here, this 120 level, this last line of defense. For me, I would really just still want to see it get back above 122.50 or so. Until it does, not that interesting to me. It just looks like it could be kind of dead money trapped down here in this range, moving sideways, or worse yet, back towards the lows. So TLT, something that I just need to see a little more proof out of it. It's a little too stagnant here for my interest. USO has gotten a bit of a bounce back here, putting together a few green sessions over the past 4 or 5 trading days. Again, in our last week's video, I think we discussed getting back above $10. That's my personal preference here for USO. I still think this is pretty damaged structurally. It's in a tough spot. You can see it's rallying back into these declining moving averages. So for me, I just would like to see it back above $10. Hold that for a little bit. Maybe this was some false kind of breakdown below the March lows. We'll have to see, but I'm not super encouraged yet. But it is notable that at least we're holding on here for now. Natural gas also trying to get a lift today. Got a good size fade, but still finished up 1.75%, getting back above this trend line and this 750 level. Again, you did have a bit of a fade off the highs there, so we'll have to see if there's any follow through to that fade tomorrow. But for now, I think the bulls, you get something to work with, a little bit of momentum, a little bit of pep here. So perhaps we can get some continuation. Still not the cleanest for me, so I'm not in love with that setup. GLD, flat on the day, had a nice pop on the open, but really didn't hold on to it, and still looks like it's in pretty rough shape. This line here goes all the way back to 2016, so the lows right here from March, April, June. You can see we kind of topped out here in January. Market didn't really care about it in March, but we're right at this general area. I don't think there's any magic here. It just happens to be a line that's drawn from these prior levels here. So the market so far oversold into it. You can see, maybe due for a bounce at this level, but you could say that about silver, which really has been crushed for a much more painful trade recently in SLV versus GLD. So just because it's oversold doesn't mean it has to bounce. So gold, sellers in control, volume very light the past 3 days, but again, still just really a messy setup, not too interesting in my mind. Silver just continues to be crushed here, still seeing no life. You're not getting that sharp snap back, at least not yet. We're seeing really just kind of a really oversold market, and then it's just kind of staying oversold and hovering near these lows. Slight progress today. We had a green finish. We had a bit of a reversal yesterday, so maybe Tuesday marked some type of short-term low. Maybe we can rally from here, but again, tactical traders, I think you could look at that, or if you're trying to leg into this as a longer-term position, you certainly could start considering it. But again, it's so dependent on time frame and strategy. There's no point in talking about execution in that respect. So silver, again, just momentum to the downside, so you have to be cautious. And I think that's it for the major markets. Let's look at some other sectors here. Now, the strongest XLK, right? No surprise, technology. A lot of these big cap names, the Apple, Microsoft, Google, Amazon, Netflix, all those guys just working higher. Facebook and technology just off to the races, floating higher. That works. That continues to work. Semiconductors getting a nice gap higher today, reviving some momentum all to new highs here. So SMH technology continues to work, and the discretionary ETF XLY also continues to work, hanging up near highs. Those are your top 3 leaders. Those aren't new leaders. They've been the leaders, and they continue to work. They continue to hang out near highs. Now, for some emerging potential sectors here, XLF is interesting. It had a reasonable day today, nice close, holding on to this general area here. You can see that if you were to go down to like an hourly chart or 4 hourly, you could start to see the works of potentially this inverted sort of head and shoulders pattern that it's working out right here. If we can get back above $24, that would trigger a nice, probably measured move back up to recent highs. So something to pay attention to. A lot of those big cap banks have that similar look to it. So this could turn into a little inverted pattern here, bottoming pattern that would hold on to the January lows. That would be constructive. That'd be great for the market to get financials participating again. XLB back to recent lows here, the lows from the first week of May. If we can hold here, get back above 52.80, that would be constructive. A little bit messy, but trying to hang up near highs, trying to put in maybe some upper level support here right around 52.50 to 52.75. So something to pay attention to. XLE, kind of similar to USO, to the oil trade, getting a little bit of a pop here. Again, still pretty messy. I mean, I think, you have to be tactical, or if you're averaging into this for a longer term trade, I get it. But for me personally, above $69, that's more or less where I would like to see XLE. Again, for you tactical players, certainly, go nuts. And then XLU here, the utilities ETF, continues to kind of hang around here near the highs, not really giving up a rollover just yet. That could be an interesting market clue here. If this starts to roll over, maybe we do get more of a risk on. Pay attention to TLT as well. So for now, still holding on to support. It likes to bounce from this trend line. Let's see if that happens, or if we finally do have something that's in change of character here for XLU. So that is the sector rundown. That is the midweek market recap. I hope you're doing well. If this is your first time watching the videos, make sure you do subscribe to our channel to get updates on a regular basis. Thank you so much for watching, and talk to you guys again soon.